All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to go through our morning analysis, and let's go. Let's start with the euro dollar. And I don't know if you guys were here on Friday. If oh, hold on real quick. Hold on really quick. Sorry, just chatting with the guys. Hold on. Okay. Let's start with the euro dollar. And if you guys were around like late last week, I had on accident right I I, I deleted like all the I deleted all the lines off of my charts, and I was so upset. Okay, but anyway, so I want to go into the daily chart in the euro, and I posted this chart last week on Twitter late last week, but the euro dollar is in a really tight consolidation. You can see it right here. Apex. This is a daily chart. You can see the apex is tightening. The RSI is like mid-range, and right now, I mean, the euro dollar is just extremely tight and extremely volatile while we're in this range too. Now, this move higher and lower on that on the employment cost index, okay, you can see we still have a little bit of distance to go just to retrace to the 786, but we gave back everything that we gained on Friday, right back to where we started. And so any dip down here to 109.40 probably is going to be supported. There's a big consolidation through here, so just keep that in mind if we continue to dip. Okay, 1.0940. Now, we get much below that. We get much below that, and then you're going to start to see support under attack, just because there's people that bought it on Friday that are like, okay, here we go. We're probably going to drift a little bit lower, but they're not going to risk much more than this. I wouldn't think. Anybody who's long from Friday. So just keep in mind that if we break through this 109, I think 109.40, I think 1.09 can also come into play, which will be support down through here, because this is 108.93, so we could start probing those areas. Resistance, I mean, the hourly resistance is right here, but you have to think who got suckered in to buying the euro dollar on Friday. Where are they going to want out? Okay, so where are they going to want out of this trade? And so, I mean, from where we're currently at 109.50, we've been as high overnight as 109.95. So I guess 110 is going to offer some resistance today, but I don't think it's great resistance at all, other than it being a round number. Okay, but we are very neutral here, range bound. Let's go into the pound. So the pound was just hitting new lows just a little while ago, brief new lows. But here's the cable. We're going to have to redraw everything on the cable. It's a 4-hour chart. Well, I want to say I'm not very excited about the cable at all at the moment. I mean, I see it's hitting new lows right now, but still, it's just not very exciting. So obviously 156.80 is key resistance, but that was a 618. So looks like we actually are going to be testing some support pretty soon. This is a 4-hour chart. This support's going to be pretty key as we come down to 155. The spike low is at 155.45. So 155.45, it's going to be pretty important support here. And then obviously resistance is up here at 156.80. We'll see if we can break that this morning, because if we break that this morning, it might expose some downside here in the cable. If we break through the support here, we could see a little bit of a sell-off just as it trips some stops. Okay, let's take a look at the Swissy. Well, Swissy's not really doing anything, but man, we had a hell of a bounce back on the Swissy on Friday. Sold off down to 95.50, bounce all the way back. I mean, pretty aggressively. This is just the inverse of the euro, so you can see the importance of the 786, which comes up at 96.83 is a high, 81 is the 786. So, you know, 96. Yeah, I mean, we're just a few pips away, but 96.80, important resistance. And if that breaks, then 97.20 comes into play. Still bullish, because as long as we are above the 95.50 level, 95.40 level, it's bullish. You can see the dip right down to there on Friday. Everybody scooped it up. So now remember how big of resistance this is. 97.25. So it's actually 97.25. And that is key resistance if we make a run up there. If. Okay. Support. Well, any dip down to this hourly support, it's going to be bought. So 93, 96.30. Okay. And yeah. Let's go over to the yen. So the dollar yen is, let's come back to, let's get rid of this. We just surpassed the 786 there. Okay. Now everybody should remember this. This is the 618. Hold on, that's not drawn perfectly, so just hold up. I'm sorry, it was a 786. Come on. Okay, there we go. Okay. So anywhere between 124.50 and 124.65 is just going to be real big resistance up here. You see the Canadian's really firm. So, or the yen's really firm, excuse me. So 124, I'm going to write down 124.50 to 124.65, which is the 786 up here, 68. Big resistance. And we're creeping up there. So 124.50, 124.65, all big resistance. And hold up one second. Huh. I don't know where support's going to be. I mean, we have to. Okay, so we have to compensate for ISM. I mean, ISM may be, might be a mover today. So let's say ISM comes in poor. Um, so let's just say it comes in really poor, and the dollar comes under assault. So any dip down to here, 123.75 is going to be very well supported. Okay, I would think so. So any dip down to 123.75 would be very well supported. Trendline support. Okay. Um, let's go over to the Canadian. So the Canadian looks very bullish, but and now any dip to 131 is going to be bought. So I'm just going to write that down. It's easy. 131.00. Whoops. 1.31 support. Matter of fact, I'll just go ahead and put a bid in. Uh, I put in a bid in to buy the dollar Canadian at 131 if we get down there. So, oh, this is a range. Okay, so now where's resistance? Okay, we're at 127% extension currently of the last move lower. Okay. Next resistance is the 161% extension that comes in at 132.50. And I mean, unfortunately, it just looks like we're wedging up there. So 132.50 is the next resistance. From where we're at right now. Now, there's resistance obviously right here. I don't want to write down 10 pips higher than where we're at, but we're at the 127% extension right now. So if it's going to turn, it should turn here, but if it hits new highs, then we're probably looking at 132.50. Okay, let's go over to the Kiwi. So the Kiwi, I mean, thing's so, so heavy. I mean, so heavy. I mean, so unbelievably heavy through here. Um, so this horizontal support, this 786 is very important for the Kiwi right through here. So we're going to go ahead and write this number down because you know, if you give up this, if you give up that support in the Kiwi, we're probably going to break into new lows. That would be my assumption. So that spike low comes in at 65.35. That is going to be very important. Okay. Now resistance. The question is where is the Kiwi going to have, like, you know, anybody who got, you know, sucked into this move. Okay, so if you look at this, let's, you know, give it a little bit of leeway here. But you see those spikes, how they just, any spike fails into this trend line. Okay, so that means if we got to spike it at 66.50, it'd probably just fade really quick. So it's like, you know, I'm almost tempted to put, and I'm going to put it back into a bearish trend, and I'm almost tempted to, you know, stick a order out at 66.50 and hope it, you know, hope we have some weak, um, you know, some weak employment or a weak ISM that pushes the Kiwi up to that resistance, and then I can fade it really quick. I'm tempted to put it in an order up there. I haven't yet, but you know, just in case we get a, you know, a spike up to there. All right, let's go into the Aussie. Do the Aussie, and then we'll take a quick break. All right, so here's the Aussie dollar, and the Aussie is obviously very weak too. I mean, we can't, we haven't been able to disrupt this downtrend. Obviously, we're heading into major support. I am going to be blogging on the Aussie today. I was going to do it. I was going to do it uh, Friday afternoon, and I decided, well, instead of doing it Friday afternoon and not, you know, not a whole lot of people seeing it over the weekend, I'd rather just do it today because I know we have a huge week. So I'm gonna be blogging about the Aussie, and I'm gonna talk about this major support that we're at. If you guys don't know why it's such major support, I'll just give it to you real quick. Okay, if you go back to 1998, no, I'm sorry, 2001, the lows in 2001. Okay, to the high, we're at the 618 retracement. If you go from 2008 to the high, we're at the 786 retracement. If you go from the 2010 low, okay, and to the high, 127% extension. Then you take this upward sloping trend line, it comes in right here, right to support. Now, we should have support here. Problem is no one's buying it down here. That's the problem. I mean, yes, the descent has slowed, but no one's buying. And I'm more worried at this point that the equity markets start to show some signs of weakness. And if that's the case, we could very easily break down. We have a huge week of data for Australia this week. So, and considering that we have U.S. jobs report at the end of the week, and we have a whole bunch of important data this week for Australia, these lows down here are so vitally important. So 72.30 is going to be support right now. That's 127% extension. You can see we spiked down there, bounced, and then obviously we're coming back down. So 72.30, big support. 0.7230, huge support. Resistance, and we're bearish into this massive support. I mean, there's no reason to be bullish right now. I mean, we can't even get a lift. So while we're below 73.50, this is kind of like if we get a spike up to 73.50, gotta short it. Oops. Okay. All right, when I come back, we're going to do the dollar index, the peso, the Swedish krona, whatever else. So I'll be back in a few moments. Don't go anywhere. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So let me go ahead and grab, oh, look at the DAX. The DAX has made a little bit of a push here. Hold on really fast while I'm here. Just let me draw something really quick. Look at 50% retracement that we just hit. Probably some decent resistance right here, I would think, right through here. Especially if we're still flagging. We'll probably need to roll over soon if that flag's going to play out. But let's go over the dollar index really quick. DXY. Okay, so here's the dollar index. And obviously, key resistance coming into play here. That 38% retracement was all that we got. But delete that. 96 and 98. I mean, this is it. This is going to break out the dollar here. Either 98, we break into new highs, and then we just start ripping, or below 96 and a quarter. Okay, and then the dollar's really in trouble this week. So 98 and a quarter, 96 and a quarter. I think that's our range. 96.25. It's good. It's at least readable, legible, and then that'll probably create a breakout. Let's also take a look at some of these other pairs. Let's go over to the peso. So the peso had a nasty reversal candle last week. Okay, here's your reversal candle. Now it's up right now. Okay, but if I was trading the peso because of that reversal candle last week, I would short it on any rally. I mean, but obviously, you have to take into consideration all the data that's coming out. Excuse me, this week. But still, this peso should be a sell on rally event. Okay, let me do something for it. Now I'm not going to put this down, I don't think, but yeah, you know what? I think I will. If you get up towards 1630, that's going to be probably a pretty key resistance. So. But we are in an uptrend. Don't ignore the fact that the peso is not in a really strong uptrend, because it is. I don't want to say it's not an uptrend. I'm just saying that price action wise, I'd probably be a seller on rallies. But I still think it's I still think it looks vulnerable. Okay, and 16 should obviously be really key support here. And matter of fact, let me do something just to double check. That's a 50% retracement, so we overshot it just a little bit. So that's why that's 16. It's gonna be pretty good support. So 16, that's a major support, and then resistance is 16.3. Actually, there's one more zero. We're in a bullish trend, but I still think that if you want to short it on a move higher, that's probably a decent place to be on the short side. Okay. Let's look at the Nordic currencies, like the Norwegian krona. Jonas had mentioned earlier, he said, Jonas is in Norway, and he says, he said earlier he tweeted me, and he said, with crude oil breaking lower, the U.S. dollar Norwegian krona should, break out towards 830. I would think so too. 827 was the big resistance, right? This is a 4-hour chart. Let's go over to the daily chart. Again, all my lines got removed accidentally last week, but as you can see here, 827 is a huge resistance. And with crude oil continuing to get demolished, I mean, it seems like a matter of time before the U.S. dollar Norwegian krona breaks higher. It just seems like a matter of time. But 827, big resistance, and then the U.S. dollar Norwegian krona. For those of you that can trade it, 8.27. I mean, to me that looks like it's going to break out. It's just a matter of time. Let's take a look at the US dollar. Oh, I'm sorry, I forgot we need support. So support here is very well supported at 810 now. We're in a bullish trend. We're capped, but it looks like it's going to break. Okay, and you can see we're winding up. Swedish krona. Oh, hey ho, hey ho, hey ho. Say hey ho, hey ho, hey ho, ho, ho. Hold on a minute there, cowboy. This thing's about ready to turn bullish again. I mean, look at this thing. That wants to break out too. 867. Yeah. I mean, we're right up against resistance here. And when it's about ready to turn bullish from being in a range, and it still is in a range, but what is it? 867. Yeah, I mean, it just looks like it's about ready to go. So this is 850. Let's just call it 852, 851 range, but it's about ready to turn bullish. All right. Oops, that's not what I want to do. Here you go. All right. So your bias chart is ready. So there you go. All right. Now let me take some of your questions.